Hello and welcome. You're watching KYC. We've spoken about quite a few sectors on this show, and one sector that we've not covered is online travel. So we thought let's take that up. It's also a stock which is absolutely a buzz today. It's called Lert Revenues Technology Limited, and it's basically branded as Ixigo. So you would have obviously either heard about it or seen it or perhaps even used it. Let me first start off with what I want to know about Ixigo. The numbers for Q1 FY26 were solid. Are they sustainable is the first possible piece. But really zoomed out on a broader sense, it's a very competitive space, right? How is Ixigo standing out? How do they continue to plan to stand out in this very, very crowded marketplace? And they're doing good numbers, Mahima, frankly. And so what's helping those numbers is what I'd want to understand. Second is, what are the growth expectations and levers? And they're getting into new businesses, especially into hotels. Yes. So that's one possible lever. Also, the revenue is skewed towards train and flights. So there's a large gap where other avenues with regard to travel is concerned, which they can tap into quite easily. Whether they are planning to do that and what the potential for that perhaps is. So that's what I'd want to understand. Also, customer acquisition, customer usage has gone up quite sharply. The monthly active users have increased and not just inched up. They've nearly doubled up over the last year or so, which is all a positive. But what does that do to customer acquisition cost? Is that continuing to remain elevated? Are marketing expense continuing to remain high because it's competitive? That's an important aspect to understand. Can take rates further expand? And an extension to that, I'll take it to number 5. Take rates are basically your commission payments that you make on each transaction. And number 5 as well, I'll couple both of these by saying that, and this was an interesting observation which Sajid sir in our newsroom made to both of us, that train prices have gone up because of premiumization within the train segment. Okay. And most of those booking trains are actually booking through platforms and are booking the more premium trains. So both of those is tying up very well. And therefore, with that increased price, will take rates also go up? So maybe the rate doesn't go up, but the value goes up. And are we seeing that trend likely playing out on the numbers? Also, what are they doing with the excess cash? Because essentially, they don't need too much investment. It's a capital light model. And therefore, what are they doing with the cash that they're generating? They've done over 120 crore of cash last year, and what the plan is going forward is what I'd want to know. Also, last off, there's no single promoter here, so that's one possible risk, that there's not enough skin in the game from management. But the other more important piece is that you have plenty of private equity players. If they start exiting, that poses a real risk. And is that risk as real as we are seeing it? That's what I'd want to really understand. But let's start off as we always do. By the way, Mahima, myself, taking you through the next half hour or so. Essentially, I'd want to first start off with what the company is about, if it's not already quite clear. But I'll quickly take you through it. It's India's largest online travel agency for the next billion users is what they call it. It empowers Indian travelers to plan, book, manage trains, flights, buses and hotels, even though buses and hotels are far smaller in comparison to the trains and flights. And Mahima, I'll probably take you through that mix. It's focused mainly on tier 2, 3, 4 cities and the mass market. They are also trying to integrate AI and technology as well as data science in all of their offerings. How is that playing out is going to be interesting to watch out in this very crowded online travel agency space. But Mahima, the rest of the company.
Right, so I'll start with the products. As you rightly mentioned, the biggest segment is the train segment, where almost 41% of the revenue comes from this particular segment. This basically includes, your ticketing business, of course, your confirmed tickets, your Tatkal tickets, plus the PNR status, the predictions, the live tracking of trains, plus the position of your platform, coaches, utility tools, etc. In this, there's also waitlist prediction, alternative routes, plus they also have the Ixigo guaranteed, where you know, if you don't get your ticket, which is waitlisted confirmed, there's a 3x guarantee feature also present on the platform. And there's of course IRCTC partnership for direct ticketing as well. Now in terms of flights booking, which is roughly 32% of their overall revenue, that's the mix. Well, again here ticket booking is included in terms of domestic, international booking as well. There's web check-in. There's also real-time information for your flights. If they're delayed, they update you on the app itself. In terms of price lock as well, there's a price lock feature where you can pay a slight amount and lock the price of a particular flight that you're eyeing on. Plus there's cancellation option, refund options available on the app itself. Then there's buses, which is almost 24% of their overall business, overall revenue. Buses basically, it's a platform where around you know, aggregates of supply of around 4,000 operators is present, and that covers your 3.5 lakh plus routes when it comes to your road routes. So that's with regards to where the buses stand. Here also there is live tracking, there is operator rating comparison, there is also Abhi Assured, something that gives you guarantee and assurance of how your entire journey will be. So that's with regards to where these three products stand. Plus they've also recently entered into the hotel business. They've launched, it's not very recent, but in December 2023, and this what they're doing here is they're cross-selling you know, their trains, buses, as well as their flights along with the hotels. So they already have an existing user base that is present, and they're using that user base to now you know, foray into the hotel business as well. So that's with regards to where hotel business stands. In other verticals, they also have their Gen AI, which is an excellent itinerary planner that plans your itinerary if you are on a vacation. There's AI travel assistance as well. There's food delivery on trains option that is available on the app, that is via the Zoop platform. There is also cross-selling and value-added products like travel guarantee as I mentioned earlier. Plus there is insurance as well on the platform, and of course meals and cabs once you're out of train or a flight or a bus. In terms of the business model, as Hersh mentioned earlier as well, it's an asset-light model. Digital business basically on app and website business that operates online, sells B2C, so directly to consumer. Indian travels via, of course, mobile apps and web platforms. The focus is on Indian markets right now, especially non-metro, your tier 2, tier 3, tier 4 cities. And they have offices in Gurugram. There's also a subsidiary in Europe, and of course, operates delivery across India. So that's with regards to where their entire business model stands. And lastly, in terms of main dependency, now this is interesting because supplier access, of course, IRCTC is the main one for trains. There's airlines and bus and hotel partners. But in terms of their overall IT infrastructure, that involves your dependency on cloud computing, data tech, as well as API integrations, and of course the payment partners as well. So that is one key dependency that you know, they have to rely on, and of course human capital, because their data is something you know, that should be in secured hands when it comes to where one person is traveling from one place to another. So that's their main dependency. This is everything, you know, a brief, everything that you need to know about Ixigo per se.
Perfect. Let's start off therefore with the metrics. We'll start off with the income statement. We'll look at operational metrics for this one, balance sheet, cash flow. We'll thereafter take up return ratio, shareholding, street cred, as well as valuation. So all of that to be covered over the next maybe 10 minutes or so. Let's start off with the income statement. Mahima.
Yeah, so in terms of the income statement, you know, it's been a good run up for the entire company. If we take a look at the past 3 years of the performance, in fact, even 4 years for that matter, the 3-year CAGR growth for revenue has been around 34%. The revenue has, you know, grown almost 1.5 times, you know, in the past 3 odd years. There's also EBITDA, which has seen a CAGR growth of almost 148%. Margins have remained fairly stable. Have seen a steady growth from that 2% mark. This is adjusted EBITDA margins from the 2% mark in FY22 to almost a 10% mark in FY25. Net profits, it was a loss-making company in FY22, around losses of around 21 odd crores, which has turned profitable since FY23, and the profits have continued to grow. Slight decline in terms of where FY24 was concerned, but overall a good growth where it comes to you know, the overall trajectory of net profit as well. So overall a thumbs up when it comes to the income statement.
You want to, Mahima, take us through the Q1 numbers as well.
Yeah. So
as well as some of the operational metrics.
Sure. So in terms of the operational metrics, I'll go there first. Of course, the stock is buzzing today on the back of the Q1 numbers. But just before I go on to that, operational metrics, overall, the gross transaction value has been on a significant amount of, in terms of percentage also, it's been on a good rise, but in terms of the number as well, it's almost doubled when it comes to, your comparison to Q1 FY25 versus Q1 FY26. Even the annual active users have increased from around 480 million to 544 million. So that means that more and more people are signing up for the app. The take rates here, the take rates for flight has slightly declined from 11% mark to an 8% mark. For train, that has remained stable because train as a business is consolidating for them. There's bus where the take rates have slightly increased from a 10% mark to 11% mark because again, that's a growing vertical for them. So this is with regards to where these operational metrics stand, but in terms of the Q1 performance has been a stellar quarter for sure, this year. And this is because, their overall transaction value, gross transaction value has gone up both for flight and business. That's been around 80% on YOY basis. Plus in terms of the overall growth also, there's a great growth in terms of revenue, 73% increase in terms of their overall revenue. Margins are slightly dipped because of the major investments that they're making in the business, and that's the only reason as to why the margins have gone up. And of course, their marketing cost as well going up. So that's with regards to where the Q1 numbers stand for Ixigo. So overall, a great set of numbers in Q1 itself.
Yeah, perfect. So very strong set overall, 11% QOQ expansion on the top line, not looking bad. Even your adjusted EBITDA margins, Mahima, yes, they've come off, but it's really, really small. Let me actually pull out those numbers. So Q1 FY25, the adjusted EBITDA percentage was around 10.4%. It's now come in at 10.1%. The guidance continues to remain 10%. And full year FY25, they've done 10.6%. So it's extremely marginal. It's rather the growth on the top line that's really impressing the street, it seems. And sustainability of that is obviously the question. So that's how at least the income statement looks. Let's look at the balance sheet now. And in that sense, again, looking quite impressive. You're seeing book value at around 634 crore rupees. And when you're looking at the overall, the current market cap is around 8,000 crore after the run-up that we've seen today. So obviously considerable price to book, but it's a platform business, mind you. Something that you must know, that platform businesses generally have lower capex and therefore your book value will always be lower and your price to book will always be more. Your cash and bank balance is fairly healthy as well at around 270 odd crore. Of course, that they'll continue to build on that. As they build on it, will be interesting to see where they're utilizing that cash, because tech will be very limited in terms of its investment. It's more about how much can they expand this number and what they do with the cash flow. That will really matter. So, Mahima, cash flow.
Right. So overall cash flow position has also been healthy. I mean, if you see the overall trajectory of cash flow from operation, that's been at a steady rate. In fact, as compared to FY23, it's almost tripled, more than tripled. In fact, it's 4 times from 31 crores to 122 odd crores. There's the overall, the cash flow from operations to PAT ratio is also healthy at 129% as of where FY25 stands. Of course, in terms of net cash flow position, the FY24 picture doesn't look very attractive, but overall FY25 on a net cash flow position basis, they have remained positive. So a thumbs up where it comes to the cash flow position as well. But as Hersh mentioned at the start of the show, right, that they're sitting on a huge amount of cash pile on, on their balance sheet. We'll have to, try to understand as to what are the plans with respect to the kind of cash flow that they're sitting on. Are there acquisitions that they're looking forward to? That is an interesting question to, or interesting aspect to look at too.
Yeah, and what kind of acquisitions, if so? Because it's a business which is ripe for consolidation, so acquisitions are understandable. But where exactly is that happening? But the CFO to PAT is quite healthy, so no concerns there whatsoever. Now, let me take it across and look at return ratios, because that's where you could see some bit of choppiness, and that we've seen. Whether this kind of early teens number is sustainable, well, it seems like it's sustainable, but we'll have to wait and watch for a year or two to see the sustainability of that. Also, the other piece with regard to this is early teens, how do they allocate capital, and therefore that will also determine where return ratios go. Because they're going to be investing quite a bit of money and a lot of it is cash, you want to see where they are investing that cash, because that will determine where the ROCE actually goes. If they are acquiring other businesses, that again is a risk. What kind of businesses are they acquiring? What kind of return ratios are those businesses playing at is what we'll want to understand. So we've given this a neutral, but shareholding, Mahima.
Right. So in shareholding, again, as you rightly mentioned, no promoter holding right now. Skin in the game is not there. And while, when they came out with that IPO also, the offer for sale was a big chunk of that IPO. It was 620 crores where, there was offer for sale for promoters as well as early investors. So that's one thing to keep in mind. FIs overall has, maintained their stake in the company from a 58% in June 24 to around 59% in March 25. So slight increase there overall. DIs overall, again, a steady state of holding in the counter, around 9% stake in the company. And lastly, public shareholding has slightly gone down from that 31% mark to 30% mark, but no concerns there as well. But we've given it a thumbs down here because there's no promoter holding per se.
And the risks of private equity investors exiting. So both of those are real risks, and that's something which everyone needs to be cautionate about, if at all that's a word. Let's quickly look at street cred as well. And the IPO price was 93 rupees a share. Of course, the stock doing very well for itself post the IPO, which happened exactly last year, June of 2024. It's given 120% returns to investors. 48%, of course, was the return which they've got post the listing itself, which happened at 138.1. So even if you purchased it at listing, you still made a decent return on this one. The 1 year stock price performance is 18%, year to date is 14%, 6 months is 42%, and the 1 month performance is 11%. So across the board, this is clearly a business where the management has kept enough value on the table for investors. So, but that's with regard to street cred. Let's quickly also look at valuations. Now, the guidance is late teens to maybe 20% kind of top line growth. The price to earnings multiple currently sitting at 125 basis the 8,000 crore market cap, which it has just touched today. It is likely that it will trade at around 79 times FY26. This is as per Bloomberg analyst estimates, but just 3 analysts cover this one. Yeah. You've looked at this, Mahima, you want to spell it out?
Yeah, just 3 analysts covering, and just on that valuation perspective, I mean, very expensive to its peers as well, right? Something like an IRCTC or a Yatra Online or Easy Trip, all of these trading, although they are also not cheap, but trading in that range of 36 to 40 odd P, but the current P for Ixigo for sure is way higher than its peers as well.
Well, let's sum it up. That's all our rating parameters on the screen, and we'll quickly come to the KYC rating. Some of these numbers were quite impressive. Of course, shareholding a bit of a concern. We spoke about 5.5 on 8 is what it commands on our KYC rating. But let's bring on board Mr. Aloke Bajpai, Group CEO at Ixigo, joining us as we speak. Alok, good morning from where you're at. In fact, good morning from where we're at as well, but it's fairly early for you. Thank you so much for joining in and speaking with us. Alok, let me first start off with that top line growth. It was very strong in Q1. Can you continue this kind of 10% QOQ expansion, or were there one-offs here in this quarter?
Well, there were no real one-offs here. I think what you're seeing is the outcome of a journey of more than a decade, right? So I think if you look at why Ixigo is growing at the pace at which we are growing, it's a function of 2 things. One, the kind of market we are going after, and we chose to go after the underserved next billion users, or the Bharat India 2 part of the market. And I think even though it took a bit longer to build the business, and of course build deep inroads into train, bus, and flights now, I think the fact is that it's a much bigger audience to cater to, right? Only 4% of Indians fly, but when you look at the numbers of people taking trains and buses, it's an order of magnitude bigger. So we kind of built a very large base, and we are now able to monetize this base. And this kind of growth has been coming in not just for a quarter, but if you look at our entire history, our CAGR, for the last 5 years has been quite good as a result of the fact that we've just started monetizing the large base that we built over several years. Will this kind of growth continue going forward? I think it's a function of two things. One, are there things we can do which we don't do today? For example, hotels is a category that we've just entered, and we have started to make some inroads there, although we don't disclose at this point, but we are seeing quarter on quarter growth starting to come in there. And of course, can we monetize our existing base even better with value-added services? So you would have seen that almost 29% of our transactions, have some value-added services also sold on top, which offer peace of mind protection. So our take rates are improving. Our contribution margin has remained fairly stable. There's been a slight dip in CM percentage, but that's deliberate because we want to chase growth at this point.
Alok, hi, Mahima also joining in. Just want to get a sense on competition. How is it looking like? What's the landscape? Because that's changing very fast. Just want to get a sense about that. And how do you think that you are standing out when it comes to, the other players who are doing the same thing?
I think Ixigo's story is a bit of a blue ocean story in that sense, because we chose to go after an underserved market where there was very limited competition, and in a way we are creating new market. Even if you look at our growth in competitive categories like flights, where there are multiple OTAs doing flights business, I think what stands out for us is the ability to tap into the first time flyer segment, which is coming, largely from people who today might be traveling on a bus or a train and tomorrow, have the capacity or the per capita income to actually upgrade them. And the fact is, because a large part of this ecosystem is already using us, if you look at our user base, more than 500 million users in last fiscal year have actually used us at least once. If you look at our monthly active users, 84 million monthly active users. So in that sense, I think we are at a crux of, we are at that inflection point where you start to see that monetization start to see the bottom line coming in with the operating leverage. And I think it's just a start in many ways for categories like flights and buses, where the penetration that we have is still much lower. So on trains, we are the market leader with 60% share of the OTA market. On flight, we would be the third largest player. Obviously, we'll wait for the others' results to see how they're growing. But we have been growing the fastest over the last 4 quarters. Buses, we are the fastest growing player and the second largest player. At an overall level, we are number one on user base and number two on revenue and GTV. That's where we are today.
Look, how do you continue to stand out in a marketplace that is this competitive? And you're getting into hotels as well. How does the scale up in hotel happen? Will it be, or rather, you've done this since December 23, but give us the strategy here. How will you stand out? Again, it's a crowded marketplace.
Yeah, I think every category that we entered was, we were not the first train booking site, nor were we the first flight OTA or the first bus OTA. I think every category we entered was already competitive. The only reason why we continue to grow and take share is because we are very focused on customer experience, right? So we were never obsessed just about selling tickets or monetizing, but actually going and solving deep utility problems in every category. If you look at products like Flight Tracker Pro or our ability to manage trips with AI, or if you look at our train tracking capabilities or train PNR prediction or the travel guarantee product that we launched, these are innovations that have come out of deep understanding of what people want and solving for their pain points. And a similar story, will hopefully play out, in other categories we enter, because even if you're a late entrant, the advantage you have is to look at that category with fresh eyes and figure out what pain areas haven't been solved yet.
Alok, when I was looking at your take rates, the flight take rates have slightly come down, year on year, but train take rates have remained stable. So I have a two-part question on this one. How do you see this improving? Because train take rates have consolidated, flight take rates are coming down. Is there a scope of improvement in both of these cases? And secondly, in the start of the show, Hersh was, he did mention that one of our senior did point out that there is premiumization of trains that is happening, right? So does that impact your take rates? How does that work? Try to, make us understand that.
Well, our take rates have been fairly stable, and in fact, they may have improved slightly on categories like flights and buses. But some of that is optics also because last quarter, the fares on domestic actually came down a bit due to some of the turbulence that the sector was experiencing as a result of Sindoor and then AI 171. But if I look at the broader, bigger picture, right, the take rate comprises of, what kind of convenience fees exist, then there's commission, and there's also value-added services. I think our ability to have latch-on value-added services and the ability to also, figure out through data science and AI, what kind of pricing and what kind of essentially personalization one can do around who to market it to or sell it to. I think that cross-sell upsell funnel has really started to work. So you can expect that take rates are fairly stable. I mean, on train we've been centered around 6%, and it's a regulated industry. So I think we've been managing to maintain it around that number, slightly plus or minus here and there is okay. But on buses, we have managed to improve it from 10% to 12% over the last 1.5 years, if you see. And I think we are at a point where we are satisfied with where we are. So we don't see any major changes happening there.
Alok, two quick questions. I have only 30 seconds left. So what do you do with the cash that you're going to be generating? Where do you invest? And second, what's the risk like of private equities exiting? How large is that?
Well, I think on the use of cash, see, I think we've always been very conservative on these things. I mean, Ixigo was built with very little capital and very little cash in the first 10 years, first 15 years of our existence, right? And I think we will, use cash effectively only where we see an opportunity to. And even at the time of IPO, we said we are always on the lookout for great companies. We've already done 3 acquisitions: Confirmed Ticket, Abhibus, and Zoop, and all 3 are playing out nicely. We will be on the lookout for investments and acquisitions out there. And also, in terms of opportunities like hotels or developing more AI products, we will not be shy of investing over there. And I think, what we expect is that, look, cap table churn, etc. I mean, every company goes through that life cycle, but I think if we continue to deliver on our promises, I think that is less of a worry at this point.
Sure, got it, Mr. Bajpai. Thank you so much for joining us this afternoon, or rather this morning. Viewers, in fact, that's all the time we have. So we'll have to close this at this point. From Mahima, myself, everyone who puts the show together, thanks so much for watching.